The next panel is the future of the DeFi economy, an outlook on how DeFi can become mainstream. Please, that would be good. If you could arrange that, we'd be delighted. On the panel is Lasse Clausen, Mathias Imbach, Stani Kulechov, Dan Reecer, and of course, it's moderated by our wonderful friend Aave Szalay, fabulous friend actually, covering digital assets of the FT. Can I just say that she stepped in here and wasn't originally planning to do this, but so many panels, but her questioning has been terrific and her understanding of the topic very, very helpful. Thank you also, Aave. Much appreciated. Please welcome Aave and her panel.
So let's get cracking. We have half an hour. Time starts now. I'll ask you all to introduce yourself, please, and give me one thing that's the biggest hurdle to DeFi becoming mainstream.
Everybody, it's Dan Reecer from the Acala network. We're a DeFi parachain launching as we speak on Polkadot. I guess my one hurdle to adoption would be user experience and the fact that the mainstream I don't think can use public and private keys and MetaMask and things like this as it stands today. So that would be my one hurdle.
My name is Stani Kulechov. I'm the founder and CEO of Aave. So Aave is the team that created the Aave protocol, which is now one of the biggest DeFi protocols out there, where you can supply your cryptographic assets into a smart contract and see these assets grow in yield. And I would say, kind of for us, I would think of that where we get more adoption is maybe more like integrations on the institutional side. So when we get all the kind of fintechs of the world, the Revoluts and the Monzos and institutional participants to actually use decentralized finance and provide that to their kind of user base, that will be a way to get more adoption as well.
Hi everyone, pleasure to be here. Mathias, one of the co-founders and group CEO of Sygnum. We are a crypto digital asset technology group with a banking license in Switzerland and also a license in Singapore, really working alongside many of you towards shaping future finance, which we believe is based on decentralized financial market infrastructure and blockchain powered. And yeah, excited to discuss tonight. I can't say anything different. Very clear in two words. It's user experience, the UI UX, and how easily users can access DeFi. That is, I think, the biggest hurdle to adoption.
Thank you.
Hi, my name is Lasse Clausen. I'm the founding partner of a crypto venture fund called 1KX. We were the first fund to only invest in tokens, not in equity or anything else. We started with probably because of that was very, very esoteric at that time. Started with $6 million. We're now at 1.2 billion. And I would say the main hurdle for adoption is that the Revoluts and the N26 can integrate DeFi, but the problem is that the regulators are scaring the hell out of them. So I think it's there's so much risk now for anybody to be involved in money laundering or enable money laundering because the term is so broad and nobody really knows what it is. But I think that's the biggest risk, right? So because we need that user experience and the user base that these neobanks have, but they're obviously very, very scared to do something that could have been terrorist financing or something.
Thank you so much. Before we get into details, could you guys tell me what mainstream means for you? Is that, does that mean that everyone in the world will be some way involved in DeFi? Does that mean that just a small portion of, society? Can you guys just, unpack that a little bit? I don't know who wants to start.
I think there's this adoption curve, right? It's pretty clearly defined. So you've got the very, very early innovators, then you've got early adopters, and then you've got the middle of that bell curve. And I think once you're sort of at the top of the bell curve, that would be, for me, mainstream. So I guess that's 30–40% of the population, interacting with it directly or indirectly. I think most of it is sort of under the hood, right? DeFi is essentially a new financial backend infrastructure. It's not really supposed to be, people are not supposed to interact with protocols. The same way that, you're using WhatsApp, you're interacting with internet protocols, but that's very deep down the stack. So I think when around maybe 30–40% of the society indirectly use, DeFi in some form, then I think then it's really mainstream, I would say.
So you Lasse, believe that DeFi could be as mainstream, for example, as the iPhone, or something that a lot of people have, but not everyone.
Yeah, absolutely. Under the hood, for sure. Absolutely. It's kind of inevitable, to be honest. If you're a technologist, and you realize, like, right now money is offline. It's really, and we had this the first time as I was a software entrepreneur before. 2011, we implemented PayPal into a website, and it took 3 months. And technically, it's a really dirty hack. You're basically trying to hack money into the internet, because the internet was made just for, the protocols are just for information exchange, they're not for value exchange. And so it's extremely inefficient to sort of, to this day, you have friction when you pay something online, right? Every time there's payments. And the conversion funnels, the 98% people put things in their shopping basket, they want to buy it, 98% don't do it. And so, yeah, it's pretty inevitable because the technology is just so much better. And I think we're still at the stage where really you have to be a technologist to kind of understand this. But when you do, it's just absolutely inevitable. There's some pushback. It takes time for things to permeate through society, and then, for example, institutions like yourself, you have a lot of work to do and regulation, etc., to enable the access. But I think under the hood, it's completely inevitable. Yeah.
I would also approach from the kind of like opportunity perspective. So let's say decentralized finance, what makes it very amazing is that, for example, for me who lives in London, and someone else who lives in, I don't know where, Lasse, you live. You live in, you don't live anywhere?
Mostly Lisbon, yeah.
Okay, let's say Lisbon, and you're in Switzerland, and where are you?
Puerto Rico.
Puerto Rico. So we like any of us, when we deposit into the Aave protocol, any of DeFi protocols, usually like you have the same equal opportunity to that, let's say, yield in this case. And I think kind of like the iPhone example is good because it's about creating the opportunity for you to be able to actually participate and let's say purchase something or get an opportunity, whether it's like investment or getting yield on your cryptographic assets. And I think, for example, where I would say, if you think of like sneakers, like Nike sneakers, if you can buy them anywhere in the world, that's mainstream adoption. And in case of DeFi, like it's kind of there, like you have the components to create like very good sneakers, but you don't have the accessibility because of the user interface, or there's some sort of like a regulatory and clarity, or some other hurdles that can be like lack of education. And then you don't have that adoption. So it doesn't mean that every single person needs to use decentralized finance. I wouldn't use. I mean, I still carry money in my pocket, and I will use Sygnum Bank as long as you have like non-DeFi services as well. But I think it's more about kind of that everyone has the opportunity to, maybe take more control of their finance and leave rest of their finance to someone else's trust.
Yeah, and I would say we can almost segment what mainstream means, and we also have as an ecosystem addressed the different segments a bit differently. The retail angle we've now discussed with the iPhone example, we are focusing more on the what does it mean if an institutional investor that manages third-party money, that has to bring a decision through an investment committee, that has to feel comfortable that the assets are safe, etc., that the audit will go through, etc., that's another element of adoption and mainstream, if also these elements of the market, this addressable market, then can have access to DeFi directly or via players that create that trust layer to make them comfortable.
Yeah, I'll just build on the concept of DeFi being a backend, and also this concept of the iPhone and what I mentioned earlier with UI and UX being probably one of the biggest challenges. Just a tangible example that I like to talk about, because for people who may not be as in the weeds on DeFi, this seems to make sense to people. So I'll try to keep it quick, but at Acala, we're building DeFi infrastructure. It's a blockchain. And what we're building with a US fintech company called Current, they have about 3 million customers who are using a savings account on their iPhone. So they've got what I would consider mass adoption in the US market, with young millennials who are using it for savings. What we're building with Current is a DeFi backend where the dollars from the Current customers' accounts will actually flow into crypto, into the Acala dollar stablecoin, and then into our blockchain. Things like money markets, our integration with Compound, other forms of yield will be kind of leveraged and then liquidated back into US dollars and distributed to customers' bank accounts at Current. So on their iPhone one day, they'll get some pop-up that might say, hey, would you like to sign up for this yield account or this DeFi account maybe? And customers will be able to opt in and get the benefits of DeFi without actually having to touch public and private keys, MetaMask, and what have you. So that to me is really exciting to see kind of this blend that we're calling hybrid finance, which is kind of banking and DeFi coming together to bring a better experience to users, but also get the benefit from the yields that we're seeing in this DeFi world.
So a couple of you have brought up Fintechs, your Revoluts and Monzos and those guys. Is it important that, in your view, that they come on board or that they sort of join the party, if you like, because of the distribution element or because of the complaints department element or some other reasons?
I think it would just be cool if they integrated DeFi and it just gets more adoption. But I think definitely like the compliance is interesting thing because whenever there is a electronic money institution that has some sort of like a progress with crypto, whether it's DeFi or something else, or just offering, let's say, their users to hold Bitcoin or Ethereum or something else, it creates kind of like a bit of like a wave and confidence to crypto in general and whether it's, for example, DeFi, and that sparks this kind of like a butterfly effect where other participants in the market will also want to kind of like a speed race into that competition and create that offering. So I think definitely like it takes a lot of courage, but also like I would say like nerve as well from compliance perspective to do anything in this big institutions. But once there's something that is happening, it kind of like creates this amazing effect.
Thank you. Lasse, you mentioned Fintechs as well.
Yeah, I think, I see kind of the progress of, I use N26 Revolut, and it's kind of sad. I mean, it takes them like 2 years to offer like a simple savings product because they're just like battling these like terrible legacy, backend systems and then compliance. It's like, we saw this Mexican team, I think it was 2 developers. Within 4 months, they built an entire bank, like just an app, just a mobile wallet where you get savings, deposits, everything. They just plug, these are like financial primitives that you could just basically plug in, and it would be so much easier for them. So it's kind of, very surprising that they really haven't jumped on it. I know for N26, the CEO doesn't like crypto. That's it. That's why they're basically sleeping. Now they announce they're going to add crypto trading or something, but it's kind of unbelievable because the one guy doesn't like crypto. That they're taking years and years to offer super simple, very basic consumer finance products, which you have pluggable as DeFi primitives, and they're actually for free. So I think it's like innovator's dilemma. It's been pretty surprising. Even TransferWise recently shut down an account of our companies because we heard that you're involved with crypto. So even the innovators of like the TransferWise and the N26 are also really showing an example of like innovator's dilemma where they don't see the next wave coming, and so I think there's also a good chance that you just start the same way that it wasn't Deutsche Bank that innovated on the UI level, it was N26 and Revolut. I think very possibly you have new upstarts coming out of the blue and just offering something crypto native that's so much better. I'm very bullish about Argent. I think Argent is a wallet. You don't have to back up your keys. You just have to say, okay, the email of this person, they can help me recover my keys. And it's also ready right away on layer 2, so the fees are very, very low, right? Because yes, if you get a normal person to deposit $1,000 and they want to put it into Aave, and they pay like $150 transaction fees on Ethereum, that's not very feasible. But Argent, basically, it's already right on an investment of ours called ZK Sync. It's layer 2. The fees are, maybe $1 or something to deposit, and that's it. And so I think that is coming, and also Argent are, they're newcomers.
Can I maybe react and maybe shed light why it's not so easy as also regulated institutions to just switch it on? I think it's actually not the technology stack, because you're right, it's very easy to plug into it, but it's about, say, 80 to 90% of things like, and maybe upfront I must say, Stani, you rightly said, whenever then, let's say, a trusted, already established player switches it on, it has this butterfly effect, right, and adoption. So there seems to be a good thing that such players are there, and there seems to be trust associated with it. Now, and we are in that process right now of as a bank wanting to obviously also access liquidity pools fully permissionless, such as Aave. It's not the technology or creating a user experience that works, which is the challenge. It's things like you need to take the regulator on board. To give you a few topics. If you do that as a bank, there would be one question. Okay, now tell us who is the counterparty if you interact with the liquidity pool, and how will you manage it as per today's regulatory framework? Will you treat the liquidity pool as via this outsourcing circular, where you then need to have annual audited financials of that outsourcing partner, things like that. How do you treat it accounting wise? If you, as a bank with your own money as a treasury, you invest and get yield from a liquidity pool. What is that accounting wise? What you put into your P&L in your balance sheet? These are the questions which right now have been.
And I think this is actually why I think newcomers will do this, because they don't have anything to lose. You have a lot to lose, and you need to take this route. And every major innovation like Airbnb, etc., Uber, they pushed into a gray zone, right? But they open new markets, and the US is very good at this. That they're comfortable with a certain amount of gray zone if it's real innovation and it actually opens new markets. And I can totally relate that, yes, if I'm N26, I'm already big, I'm going on this normal fintech route. Incredible risk, right? That I've, added Aave, and then there was someone from North Korea that put money into Aave, and, now everybody, evaded sanctions. That's a massive risk, obviously, that you have when you're big. But we've seen this over and over again, that you have smaller startups, they're willing to take that risk. And then, especially in the US, if overall this seems to be a positive development, this is real innovation, it kind of, they seem to get along with it and push everything forward. And Uber, Airbnb are really, really good examples of that, where, they pushed into sort of a regulatory gray zone, but they created huge new markets, very, very tangible, huge consumer benefits, right? Everybody loved Uber. And they were able to mobilize their user base and say, like, okay, maybe they don't have a taxi license, but I want this. I want to use this. And they got, 50,000 people in every city to say that. So I think that's... could be an argument why, you have something like an Argent that's just a startup actually saying, yeah, I don't, it's not a problem for us. We're not a big legacy institution that has a lot to lose in case, the deposit into Aave was, the regulator didn't like it.
So do you guys think that there is a bit of responsibility on you and on the industry itself to sort of push into that gray zone and establish a framework that eventually maybe regulators will be comfortable with? And is that happening? What are you guys doing about this?
I think it's happening, right? You see that DeFi is definitely pushing into, if you want to have an attorney who says, I want to reduce this to zero risk, you wouldn't do DeFi, right? Nothing, you couldn't touch it. There is definitely risk involved, but I think this, again, every major innovation was something that was a bit fringe, that pushed the boundaries forward, thank God, I think we have some regulators, some political systems that are kind of more comfortable with this. Europe, Switzerland, Germany, I'm originally from Germany, it's impossible. Like, gray cannot exist. Everything needs to fit in a box, black and white. And that's why, quite frankly, the innovation that we see coming out of Europe is, if you look at the last 20 years, the track record is not good.
I think when there's like a lot of benefits and people like see those benefits and can recognize them through education or they're obvious or through usage, you get like a lot of like masses behind and communities behind. And I think decentralized finance has done it like very well because each protocol has a community. So this community kind of like upholds the risk management. So if you look at the Aave community, what was for me very surprising, and I personally don't have a financial background. I've been always like a finance geek. That's why I built decentralized like in financial protocols. But for me, it was very exciting to see that how well these communities are managing risk and setting different kinds of risk parameters, engaging with third parties to actually create, let's say, for example, liquidity market risk analysis and stress testing these protocols. So definitely that has been very surprising to me. And also, like, it's not anything new because there are industries where you have a lot of kind of like self-regulation or soft law. And I think with DeFi, the benefits are substantial because, when you look back in 2008 and the financial system, there wasn't any visibility on the markets and exposure, for example. And decentralized finance kind of brings completely new way to interact with finance and think about finance. So it's not only about you managing your finance, but you are participating in markets that are transparent. So you see all the transactioning. You can quantify all the exposure of any single asset in the Aave protocol and the whole DeFi ecosystem. And when you have this kind of like benefits like the transparency, less risk of the custodial risk, it starts to kind of like pick more traction. And these networks are user-owned, which means that the value doesn't go to shareholders, but actually the users that are providing liquidity using Web3 protocols. And that's where the people are getting behind of the networks instead of behind of like companies. And I think that will be the user-owned aspect of DeFi is what will be one of the main drivers as well.
You mentioned benefits.
Would you mind if I
go for it.
Because I think I have to defend Europe and Switzerland a bit to make it a conversation here. Look, the fact that we're all sitting here is at least partly also because there was some years ago the idea in Switzerland came up to use a foundation structure to launch an ICO, the Ethereum ICO, to launch decentralized permissionless infrastructure. Out of that, the crypto valley emerged. And out of that, the DLT law, which has been passed by the Swiss Parliament, has been put into effect. The two first crypto bank, one of which being Sygnum, that I'm representing here. I think in the grand schemes of things, Switzerland has done its share towards innovation in that space, and now we need to just make sure that we keep up with the US, which now really is obviously in the spirit that it has always done, going very fast. I also agree with you, Lasse, that probably it needs both. It needs those who go fast, break things. Innovation sometimes requires some exuberance, right? And then you fail fast, you regroup, and that's what's constantly happening in crypto. But you probably also need those who kind of, at the very core of what they do, and we have taken that stance, respect that future has heritage, and that heritage, for example, include things like we don't want to, we accept that there's KYC, there's anti-money laundering rules, and let's support the ecosystem and also the DeFi community by helping to educate the regulator and to create products that come from that side, right? Because that's also an element we need for true adoption, that finally also institutions can come in.
And also the UK, we have the Silicon Roundabout, so yeah. You guys mentioned benefits, the benefit of DeFi. Is the risk reward there for DeFi to be mainstream from an individual's perspective? Because DeFi is still pretty wild, right? I mean, I've seen stats about 12 billion and billions of dollars that just kind of go missing through hacks or theft or one way or another. So do you think that the risk reward is there for it to become mainstream? Is that benefit of saving money, on fees, enough to take that risk?
Yeah, I mean, pretty clearly, because if you're an American and you have dollars in a bank account, what is this this high yield savings account from Goldman Sachs? 0.5%, that's the best you can get, and they're 10 times better than other banking account in the US.
But at least you know that the money will be there.
Not necessarily. I mean,
no, not necessarily.
Yeah.
And they can always shut down your bank account and say, hey, this one transfer was weird, and so I don't know. I think it's where we see these sort of hacks or rug pulls happening is, but it's obvious for 99% of the population when it screams 10% per day guaranteed yield and deposit now with a countdown timer. I mean, it's common sense, right? Everybody else knows this is a scam, and then there's just this 1% of the population that is is so short-term driven, and so I think it's also you can see that it's a very small segment. Sometimes the numbers are big, but it's a very particular group of people, and quite frankly, it's the people that go to casinos as well, and these kind of folks. So I think you can, and that's always the question the society has to ask, right? Do we cut down everything to accommodate for that 1%, and then the rest of the society doesn't get to have any of the benefits, and we've made it safe for really the lowest common denominator? Or do we accept a certain kind of risk? And we do it, for example, like, I don't know, we drive cars, right? We know there's risk in cars for some people.
I mean, I guess there is a bit of difference between casinos and bank accounts. But,
but it's you have plenty of products that are very moderate in their announcement. The way Aave, the UI says what the yields are, it's real. And then there's these casino things that say DeFi 10% yield every day, and that's obviously attracts the casino kind of operators. I think for the normal person, if they want a relatively safe, yield product, they can use Aave and Compound, and those things are very, very proven and safe. And yeah,
It's just I'm pushing you back a little bit because I think a lot of people for whom it's attractive, that you can get yield and DeFi would be a good option, are often perhaps a bit more desperate than people who can maybe afford to lose a bit of their money. So I'm just sort of wondering if there is anything that you guys think that could be done to maybe steer people away from those 10% type.
I think you just have to understand that DeFi it's a wide range. You have the 1,000% per day, and then you have for example, stablecoin pairs where you can earn maybe 5 or 8% and know that it's relatively stable. But the mainstream isn't going to be using the 300,000% per day. They're going to be using something that was already vetted by, for example, a fintech company or a bank who's integrated with that DeFi protocol or blockchain. And when they're offering it, I can almost guarantee it's not going to be pure exposure to that interest rate or that yield that they're getting on the DeFi backend. There will be some aspect of insurance. There will be some kind of like a hedging pool for price fluctuations. So I think that's where, like the mainstream you're talking about, there will be a lot of kind of safety measures to hedge against potential fluctuations in yield.
I want to just say that kind of like I very much agree with this because like what makes decentralized finance and all this like Web3 technologies interesting is that anyone, any part of the world can actually build, it can be like financial protocol or non-financial, and you don't need to have like a big infrastructure to actually do that. And give an example, I mean, I was still studying in University of Helsinki back in Finland, where I come from, and I got this idea of like what if you could use create deposit accounts on Ethereum, and one thing led to another, and it became a protocol, and it just showcases. And this is just one of the stories of hundreds and actually thousands of developers now in the Web3 space building and innovating. And it's kind of like true that Web3 technologies, they're like an open space, so anyone can come and sandbox and test different kinds of things. But there are teams that are building like industry standard protocols, auditing them 5 to 6 times. We usually do 6 audits, independent audits at Aave. So I think like definitely like recognizing these different things is one thing, and the educational part, and also like the gambling part, and also all this kind of like incentives in general. I think everyone in Web3 is still kind of like an early adopter. So you might use a network, use a protocol, you might lose funds, but then you get remunerated by getting part of the network in terms of like a user airdrop or something similar. And I think it's just like kind of like showcases that we're still like very early in the layers. And I think at some point someone builds a firewall. Let's say like if you use this product, like you only will deposit into some of particular less risky protocols, and centralized parties like Sygnum and the Coinbases of the world, they can actually be those players that can actually like navigate users where to deposit and what kind of DeFi to use as well.
Thank you so much for the panel. I hope you enjoyed that, and I'm sure that we can have further chats with the panelists outside. So thank you.